This is Software Meets Business, a podcast sponsored by Head Channel.
Great. Welcome to another episode of Software Meets Business. And I'm very excited today because you've got Juan Ignacio Garcia, who is the CEO and founder of Bupos. And this is going to be a very interesting talk because it's going to bring two different hats, definitely software side, but also on the business side. Juan, can you give us a bit of background about you and Bupos?
Definitely. Well, first of all, thank you for hosting me, Rich. It's a pleasure to be here. I founded Bupos 4 years ago. Before that, I was the CFO at a company called Cabify, which is like Uber for Spain and Latin America. I co-founded that business as well. It was a very exciting 8-year journey in which we turned it into a unicorn. And I had the chance to get involved in not only in the finances of the company, but also in operations and payments, in very interesting, detailed things, and it was really fun. So at some point in time, I decided that I wanted to be behind the wheel rather than being the co-pilot. And given that the position was not open at Cabify, I started thinking of ways to do that. I'm perhaps not super creative, so I didn't have that many ideas. And I thought it would be good to buy a business. So I started exploring business opportunities. In the beginning, I researched the e-commerce sector, which was very hot at that day. In the end, I didn't buy anything there. But I got to the realization that the M&A world for small businesses is very dark, I would say. It lacks transparency. It's really hard to find businesses for sale in the market. You don't know what the price, the right price for these smaller assets should be. And also, it's really hard to get financing. And that's how we started Bupos, with the goal of helping people find and fund acquisitions of small businesses to buy. In the beginning, we started with both e-commerce and software businesses. Over time, we dropped e-commerce because they were too volatile for our financing and focused on SaaS, which is what we're doing now. So you could either buy a business from us and you could fund it as well if you come to our platform.
Is that the division for Bupos is basically helping smaller SaaS businesses find funding through you, or do you fund it from you have other partners that you work with that provide the funding?
So we provide the financing. We work with a credit fund called Fasanara. It's a UK-based fund, and they back us with a credit line of up to 100 million. And so we deploy it. But I would qualify what you said. In the end, what we're helping is business buyers, people who are buying a business. And so we give them financing so that they complete their acquisitions. What we do with SaaS business owners is help them sell. We will match them to a buyer and help them go through the process of selling a business.
Okay. So what you're really saying is the SaaS, someone decides they want to buy a SaaS business, they come to you, you've got a bunch of different SaaS businesses, you help them find one that really fits their the theme that they want to go after, and then you help them acquire it by providing funding to them to do that.
That's exactly how it works.
Mm-hmm. And do you have any? How do you work out the value? Do you work out the valuation with them, or is there a?
So the good thing is that we operate the platform, and here's where software comes, right? We operate a platform which is data-driven. We extract info from the SaaS businesses that are listed with us by using data connectors. We connect to their bank accounts, to their payment platform, and to their ERP. And we also scrape data out there in terms of valuation multiples. And so using the metrics of the business, using the right set of comparable businesses for ranking that business and benchmarking that business, and using the valuation multiples that we're seeing in the market from different sources, mostly other brokers, but also databases, we put that together and we get to a valuation. And that's how we benchmark the businesses and we provide valuations.
Okay, that's interesting. Are you only operating in the US, or do you work outside the US as well?
We work in the US and in Europe as well. I would say North America because we have a few Canadian businesses as well, and in Europe.
Yeah. Okay, that's very interesting. It's very, very interesting. And so, well, talk to me a little bit about how, because obviously you could run the business just with a bunch of spreadsheets, right? Did you run it with spreadsheets to start with?
Well, that was the MVP was definitely spreadsheet based. And what's interesting about what we do now is that all of these data connectors pull to a SQL database. And so that SQL database is digested from Google Sheets. So our analysts can use all those data connectors. We have obviously, I would say, a processing ahead of that, so we can extract the most valuable pieces of info in a way that a financial analyst can use it. So ultimately, the final part of the usage of that is done on spreadsheets. But the business, I mean, the platform itself is, I would say, this is 80 to 90% a tech business, and 10 to 20% services business and Excel business.
Okay. So so just talk us through the story of kind of, you came up with the idea, you then started to run and started to, get the database together, but of course it was a lot less mature. And then did you build some custom software to basically run it?
Yeah, actually, one of our first hires was the CTO, and he was instrumental in automating everything from almost day one. But obviously, the MVP, I think, the bad thing about working with spreadsheet is that it's hardly scalable. So you could definitely run a business like this with spreadsheets, but the problem is scalability. Like how many transactions can you do with just spreadsheets? It will depend on how much people you hire. Whereas if you automate things and you start using that data in an intelligent way, in a smart way, then the business can scale much faster. And that's why we involved our tech team very early on. So the tech team has also a background in fintech, and they were familiar with many of the things that we were doing, and they helped us automate the process pretty much early on.
So you got the CTO on board was one of the very first hires, right?
Yep.
And did you feel that was I'm assuming you felt like that was a key hire because you knew you were going to automate a lot of the work, right?
Correct. Yes.
Yeah. And so how did you find them?
Yeah, that's a good question. He went to university with me. He had worked on a couple of startups. I think, in the end, when you start a business from scratch, you generally rely on your closest network. As you scale, obviously, you need to find different things, and that's where professional hiring kicks in, and then you have to start figuring out how to source talent.
Yeah. So, okay, so the CTO came on, friend of yours you knew, came on board and then started to build out an internal team, or did you use external?
We used a mix of both. I'm saying we had because now we only have the internal team, but in the beginning we had like an outsourced team that worked from Poland and Ukraine. We also built our internal team, and then over time we just kept the internal team.
So, I mean, obviously, if you just use an external team, then the knowledge about your systems and everything would be sat with them, right?
Definitely, yeah. I think it's key to have an internal engineering team if you're building a software business. Obviously, if you're building another type of business and you just want to build some tools, it makes sense to work with external people and you just buy that technology and use it over time. But if you want to continue innovating and add on top of what you build, I think it's a core competency that you need to have.
Yeah. Well, let's start talking about the kind of the history and of the product that you've built. So when obviously you started running everything with spreadsheets and stuff, but then you built out the technology to support it. So talk us a bit kind of through kind of the features of the software system that you built that runs Bupos.
So I think there's two parts. One of them is the data processing part, which is very interesting. And then the other part is mostly about user experience and making sure that our customers can find the right businesses easily and can interact with sellers. So that first part is perhaps a little bit easier. There was obviously a lot of work invested in designing the user experience, but in terms of technology, it's mostly a website, a web app in which you just pull the different data components of the business that you're selling, and you present it to the buyer in a way that is easy to read. And then you also onboard the sellers in a way that is simple and there's no attrition. So we focus on mostly reducing attrition over the process of onboarding. We look at metrics like usage from the buyer side and making sure that the people is engaged and seeking businesses. That's the type of thing, but there's no, I would say, real-time criticality or anything like that. It's mostly the hard work is more like designing the experience. Then the other part, which is a little bit more perhaps technically challenging in a way, is all the data processing. So there we have quite a lot of businesses. We've had requests in around like 10,000 requests in the past couple of years, and so we have to seek the way of processing all the data that we're gathering from these businesses, which is generally huge lists of transactions. Accounting is perhaps a little bit simpler because it's mostly basic ledgers that we pull from the ERP. And then the bank account, we use Plaid, and it's also kind of lists of transactions. But I think I would say the hardest part to process is the payment processor, because you have a connection to Stripe, and then you have thousands, sometimes even millions of transactions, and you have to make sense out of all of that and present it in a way that a financial analyst might use it. And so that part is the one in which we invested the most, making sure that, first of all, people connect their accounts, and then making sense out of that, storing that into AWS, and then processing it and using it in a way that makes sense. And that's perhaps the part I'm most proud of.
Let me just interrupt this podcast for a few seconds. I just wanted to let you know about our wonderful sponsor, Headchannel. Headchannel builds software engineering teams, and they've been building software for clients since 2003. They have a very simple engagement model. Either they develop and run it, or they build it and you run it. They can also help with finding a fractional CTO if you need that support. You can find them at headchannel.co.uk. And now back to the podcast.
If you can you get a little bit more into the detail of that? I mean, obviously, you're pulling the ledgers from the different, the accounting system and the transaction logs and everything. And then what does the system really kind of look for? Or does it have to discard any data, or does it have to augment data, or how do you get to that information for the financial analyst?
Let me give you an example of something cool that we do. We take all the transactions from Stripe or Paddle, and out of that, given that we can extract the individual token for each transaction, the user token for each transaction, the amount and the date, we can build retention cohorts. So we can build user retention cohorts as well as revenue retention cohorts. And so the whole platform takes all those transactions and builds these triangles that generally you use to assess whether there's good retention or not so good retention. And so the financial analyst can see that on screen immediately, and they can also download it on a spreadsheet so they can connect it to whatever model they're using. And one of the key components when you're analyzing a SaaS business is getting to a good understanding of whether there's good customer retention or not. So then we cross that with other info from subscription management systems like Profitwell or Bear Metrics, which are really good tools for managing subscriptions. And we compare what's on the subscription platform with what's on the transaction platform. Because sometimes payments or subscriptions get paid like in 1 year in advance, and you have to assess retention in both of these ways. And so that's the type of thing we do. What typically you would do with spreadsheets, and it would take you a long time, and you would have to do it like individually, one by one. We automate it, and we just pull the info readily available.
Yeah. Okay. So if I was a SaaS owner of a SaaS platform, what would I do? Would I sign up to the Bupos platform, and then it's a very automated experience of connecting in the different things, or how does the actual process work?
We have two things. You will interact with our technology, and you will also interact with our team, because I think it's very important whenever you're selling a business, having this kind of personal interaction is very important, and you cannot remove that. I think the technology is very helpful for improving the experience, for scaling, and so on, but you will always need a contact point. So that contact point is the first thing you have to have, and we have a very strong advisory team that will answer to any questions that you may have, and so on. And then you go to our platform, you sign up, you have to let us know whether you're on the sell side or on the buy side, and depending on that, you will go to different paths. And if you're on the sell side, you will be asked to connect your bank account, to connect your ERP, to connect your payment processing and subscription management platform. And with that, the advisor will give you feedback in a couple of days. And they will say, the valuation looks like this. This is the set of comparables that you can see. You can also see that on the platform itself. So you will get feedback via the platform as well. But it's also very helpful to have this person, guiding you through all the details and so on, and getting to explain you why.
Why the business might be worth a certain amount of money in the market. Yeah. Okay. And then once that happens, I suppose you say, I'd like to list on the platform, and then for a certain valuation.
They accept a mandate, and then that's posted on our platform, and that's visible to qualified buyers. On the buyer side, what we look is to engage with people that are not time wasters. Whenever you sell a business, you will attract a huge cohort of people that are just browsing, but don't have and that's true. I mean, it's exciting to look for businesses to sell, but it's also a hard decision to make. Sometimes you're working on something and you have the ambition of buying something, and you will never get to do that or take that step. So you don't want to work with people that don't have a clear intent. And we filter them by asking for the credit score, for their availability of funds, which is also important. And we also parse their LinkedIn profile to get to an understanding of whether they would make a good operator or not. And so that's what buyers need to do. And obviously sellers will only engage with people who have been through this process, so they have a serious intent to acquire businesses.
Yeah, I suppose that helps that, the buyers on your platform are more serious than they would be if you just put it up in the, just put it out there on the internet, because you will get lots of time wasters. Is there anything else that you do to help the buyer-seller transaction happen?
There's also something else that is important. The buyers feel what we call the investment thesis. So they say, I'm interested not only in SaaS businesses, but in B2B SaaS, in this type of size of transaction, this type of business model, and so on, this type of verticals. And so by defining that, they get to see relevant businesses. Because one of the things that happens with other businesses, platforms, and business marketplaces is that you get a huge sample of businesses for sale, which is good because you get to see a lot of different businesses. But on the other hand, sometimes it's a little bit overwhelming. So you remember the good old days in which you just had these CDs with music on them and you just play them because the ones that you had. Now you go to YouTube and then you're completely overwhelmed by the amount of music that you have. If you are able to define very well what type of business you're after, then you don't waste time either as a buyer. You kind of go to things that match your thesis. And that's also very important.
Yeah. Interesting. So I suppose I've got to ask the big question here. Because there's probably some SaaS founders listening to us. How much is a typical SaaS business worth? I guess how do you value it? Do you value it on a multiple of annual recurring revenue, or is there some other metric that normally gets used?
Most of the businesses we work with are not the VC type or startup type of business, are more like bootstrap businesses that are profitable. And that's important in terms of valuation because the typical buyers will look into profitability multiples, even if they sometimes also focus on ARR multiples. So I would say it will depend a lot also on the size of the business. So early stage or like smaller SaaS companies making up to 2 million ARR might be valued at multiples of 2 to 4 times ARR, depending on a number of metrics. Whereas if you have scaled a little, then the multiples that you will find will be higher, perhaps 3-5 times ARR, depending again on the quality of your metrics. Mostly revenue retention is something that investors look to see holding very strong, and obviously gross margin is also important.
Yeah, retention is very, very important because obviously it costs a lot more to get a new customer than it does to retain them, right? So
yes, and then also something else that we do is we group them by vertical, because some verticals or some industries are more attractive because they're perhaps less volatile or whatever compared to others.
I'm going to ask the question then: which are the industries that are most attractive?
I think it will depend, but mostly models like vertical software type of models in which you're targeting a specific industry rather than something that works across the board. So think of, I don't know, accounting software. That would be more like a horizontal type of business, and that generally will get slightly lower multiples compared to a CRM for the hospitality industry, for example. But yeah, ultimately there are a lot of nuances there. We try to kind of group businesses based on a number of different factors and see correlations with multiples and so on. And there's also a big component of how the business is run and so on. So there's always a discretionary type of component there. But yeah, generally vertical SaaS businesses are more attractive these days compared to more like horizontal SaaS businesses.
Yeah, interesting. And then so after, say the buyer and the seller find each other on your platform, do you then, because obviously the buyer then has finance from you as well, right?
The buyer can have finance from us, or they can just use their own funds if they have them.
And do you do the transaction? Do you handle the transaction?
Yes, we help through the whole process. We handle, obviously the due diligence is something that the buyer needs to do, but we're on top of it. Our advisor is always involved, and our platform facilitates the closing process. So we gather all the documents, we request that all the technology platforms that the business has are migrated to the new owner, and we ensure that happens because we ask them to reconnect to our platform. So yeah, in summary, yes, we help through the closing process, and we facilitate the ultimate closing.
So as you've been growing this, and you've had feedback from the buyers and the sellers using the platform, what are the biggest sort of changes that you've made as you've gone through that process of building out the platform?
The changes that I've made, I think, in the beginning, we focused a lot in e-commerce, and that had its own peculiarities because we had to connect to Amazon, to Shopify, and so on. And the type of metrics that you look into an e-commerce business are completely different to SaaS businesses. And that's one big change. Obviously, we had to adapt everything for SaaS and pay more attention to SaaS. And I think, again, probably the biggest game changer is that we started providing financing only. But given that we were listing businesses that were pre-approved for financing, people started coming to us for finding businesses, not only looking for financing, but also looking for a business to buy. So we became a hub in which you could find the whole package. And for that, obviously, we invested in enhancing the experience of finding a business, buying a business, and selling a business, which was not so developed back then.
Yeah. So you kind of combine, it's quite interesting because normally you get the financing for acquisitions from one place, and then you get the brokerage who does the whole, bringing buyers and sellers together. But you started off with the financing and then went, well, hang on a minute, because we're so technology first, we can actually be a brokerage because the relationship there between the two things is incredibly close.
And it happened organically. Again, it was customers that started coming to us and telling us, I want to buy a business. Just let us know what's on the market. And so it came so natural.
Mm. So what went wrong?
Many things went wrong. Obviously, we made a lot of mistakes. I think the biggest mistake is focusing so much on e-commerce. We learned a lot on e-commerce business, and that didn't go well because e-commerce, first of all, because there's intrinsic volatility in e-commerce businesses. So you have to be more prudent when funding these businesses. I'm not saying it's impossible, but you definitely have to follow different set of criteria and parameters. And that was our biggest mistake. And the second thing is it was very hot back then, and then the cycle obviously impacted in that sector. But all in all, I think we built something that's got market fit. I think we're proud of what we achieved, and we're helping a lot of people buy businesses. So I think those mistakes were good learnings for getting to where we are now.
Did you have any mistakes on the technical side? Did the database crash? And
I think we made mistakes more in the hiring. Perhaps we hired, first of all, too many people because we had this external team and then a big internal team, and then it was just eating our cash flow out. So we had to focus on our core competencies and what we wanted to build. At some point in time, we had a huge design team, which made sense for building all the experience for the buy side, sell side. But it was too much. It was really hard to manage. So it came a point in time in which we were being slower in delivering and producing, even if we had a bigger team. And that's our biggest mistake.
So if you did it again, what would you do differently?
I think I would have perhaps gone a little bit slower because, when you've raised money from VCs, you're always pushed to deliver very quick and grow very high. And sometimes that's not the best thing that you can do if you want to build something sustainable. So I think I would just have focused on the internal team, hire a smaller yet effective team, and try to solve the bottlenecks by prioritizing, by having a good roadmap management, and figuring out what adds value and what does not value. Because we also built some features that in the end were not used and parts of our product that didn't go anywhere. And I think if we had prioritized and worked our roadmap better, we would have gone to the same place, but investing much less.
Yeah. Okay. So what's next?
What's next? I think we want to continue scaling. I think we're again very proud of what we built. What goes next is trying to do this with slightly bigger businesses. As businesses are bigger, they become more complex and harder to understand. And the way of processing and analyzing that is much harder and perhaps less scalable. But we want to see whether there's an opportunity of doing what the big investment bankers do with the support of technology. I don't know whether we're going to be able to do that, but we're going to definitely try based on what we built thus far. We think there's a case for that.
So what's your sort of range at the minute?
Right now, we can do businesses up to 20 million, which is relatively big. starting at 1 million, and I'm talking about ARR mostly. But I would say that most of the businesses that we're looking at are at around 4 or 5 million.
Yeah. So you want to move up the scale, basically.
Yes, and I think we have the team because our team has experience as former bankers or former SaaS operators. We have the technology, but perhaps we need to invest a little bit more in scaling that. It's just a matter of trying and trying to implement analysis tools for all the nuances that a bigger business may have.
What's next for the platform? Have you got any ideas for new features on it, or is it?
Again, we want to invest. I think we solved the experience part, and we want the data part to be the driver of everything. So obviously, if you implement additional analysis and additional outputs with the data that we're using, that also kind of has to be implemented in the front end and in the experience. But that's going to be the driver for our coming features. And I don't want to anticipate much, but that's the type of thing that we're building now.
Yeah. Okay. It's exciting. And what's the kind of like are you going to just stick with SaaS stuff, or is there a bigger vision?
I would say there's a long-term ambition of helping every type of business. But at this stage, given that we're data-driven and tech-driven, it's much harder to extract data from other types of businesses. Over time, we'll see. I mean, we've gotten customers coming to us with kind of brick and mortar businesses or industry businesses. And they tell us, I got a CRM that is kind of industry standard in my sector, and you could extract all the data from that CRM. And so, it's an interesting idea. Obviously, we have to prioritize. The SaaS industry is huge, so we will probably remain focused there for quite a few years. But definitely moving to industrials and so on will be our ambition in the long run.
Yeah, absolutely. Okay. Well, Juan, it's been a great having you on the podcast. I've really, really enjoyed it. So thank you so much for your time and giving us a bit of an idea of how you've built Bupos through from essentially a standing start into a great business supporting SaaS businesses in the MA sector. Thank you.
Thank you for hosting me. It was a pleasure for me as well.
Yeah. Thank you.
Thank you for listening to this episode of Software Meets Business, the podcast sponsored by Head Channel. If you enjoyed this episode, please leave a rating and review on your preferred platform.